morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Friday, finally, September 18th, 2009 at 11:30 a.m. It's Eastern Daylight Time in the U.S. It's 4:30 p.m. in London, 10:30 a.m. in Mexico City. If you need to reach us, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. We have a couple of stories that have come in since we put the issue to bed. This is coming from, I believe, Reinsurance magazine. They're saying that Marsh Mac has completed acquisition of International Advisory Services, which is an independent manager of captive and third-party insurance companies in Bermuda. IAS, which manages over 150 captives worldwide, is headquartered in Bermuda. Marsh manages over 1,100 captives. As part of the deal, there's a well-known name, David Ezekiel, founder and CEO of IAS, and David Pickering, EVP and COO, will be joining Marsh's leadership team. In a story coming out of London, this one is definitely from Reinsurance magazine. 4 former heritage underwriters, including former active underwriter Nick Jones, are going to form a new Lloyd's non-marine syndicate. The franchise board has given approval for a new non-marine syndicate to begin operations on 1 January next year. It's believed that 20% of the capital is coming from Flagstone Reinsurance down in Bermuda, the other 80% coming from a wide variety of third-party sources. Some of the other names, in addition to Mr. Jones, are Darren Warkup, who is the binding underwriter, Andrew Rowland, deputy active underwriter, and the claims director Simon White. They left Heritage and they're taking a year of gardening leave, but they've been putting plans together for the new syndicate after their covenants expired this past July. Nobody can be reached for comment. Neither Heritage, nor Jones, nor Flagstone. So it's a sound of one hand clapping, although the Reinsurance magazine usually doesn't put things up unless they're real. All right, we'll go to our main news. The stock market's up a little bit as we start. It's up 30 points. Yesterday it closed down 7. There was an earthquake, a magnitude 6.0 quake, and we have a picture of the National Geological Survey here just south of Manila. Struck at 6:23 Greenwich Mean Time this morning. It was about 150 miles southwest of Manila, about 100 miles southwest of Calapan, Mindoro. It's not yet known whether there are any damages or casualties. We do not think that a tsunami alert has been issued. If we find out anything more on that during the broadcast, we'll come back and tell you. Insurance Day is reporting this morning that the German electronic giant Siemens has agreed to accept a 100 million British pound settlement from its insurers. That's 147 million US. This is for its D&O insurance, rather than the 250 million pound demand it had previously requested in connection with the corruption scandal. I should more properly say in connection with their attempt to get reimbursed for the $1.3 billion they paid out in the corruption scandal. The D&O consortium was led by Allianz, rejected the 250 million pound figure out of hand because they said that a warranty declaration in which Siemens would have promised that it was not aware of any possible actions which could lead to a D&O claim was never signed. Siemens, of course, agreed last year to pay more than $1.3 billion US to settle the corruption claims in Germany and the US. The lead on the consortium is Allianz. Also in the deal is HDI Girling, Ace, and Zurich. Additionally, 3 of Siemens' management team members individually agreed to pay Siemens £500,000 each. This is in addition to the D&O cover that they're going to get back. Here's an interesting picture. This, of course, is Lord Levine. All he's missing is his wig. The chairman of Lloyd's made a speech last night, and the gist of it is that the argument that some of the financial sector in the UK is too big and not socially useful is dangerous talk, according to Mr. Levine. He spoke last night in London at the Lloyd's City dinner. He said that financial services had been indiscriminately demonized and that the so-called Anglo-Saxon model of capitalism had come under sustained attack. He accepted that some parts of the banking sector had not acted responsibly, but he did say that the UK was an international leader in financial services. Quote, "It was nonsensical for politicians and others to suggest that the UK financial sector was somehow too big for the UK." Levine was probably speaking about Lord Turner, who is the new head of the Financial Services Authority, who has made some comments suggesting just that the financial services industry in London has gotten too big and has in fact been somewhat unregulated. Mr. Levine went on to note that not everyone in the city was an accursed banker, adding that this hugely diverse sector had nothing to do with the credit crunch and its excesses. My. Okay, we'll move on. Here's an interesting news. This is a big win for Australian-based QBE. Their French operation has been awarded a public tender by the Société Nationale de Chemin de Fer de France. This is the national railroad operator for France, for its comprehensive general liability program. QBE already participates in the SNCF property program, and it's become the first significant general liability win for the French corporate accounts business of the Australian insurer. The new 3-year program will see QBE become the lead insurer on the layer in excess of 150 million euros, as well as participate to layers up to €500 million. QBE is overjoyed. The general manager in France said this successful tender is a strong signal to the French general liability market. It's the first time we provided a significant capacity on a general liability corporate account in France, and we're pleased and delighted to have been selected by such a well-known name as SNCF. Our congratulations to them. Markel in the U.S. is seeking to raise $350 million with the funds to be used for acquisitions and other general corporate purposes. The insurer is based down in Virginia. They said that Barclays Capital and Wells Fargo Securities are going to be joint book runners. Public offering is expected to close on September 22nd. It's going to be in the form of senior debentures, which will be a drawdown from an existing shelf registration. Moody's has assigned a uppercase B to lower level A2 rating to the $350 million debentures. Stock market's up about 35 points. We'll go to a word from our sponsors.
If you see something that looks out of place, don't hesitate. Say something. It may be more important than you think.
I see here on the wire that the unemployment rate in the state of California has climbed to 12.2%. That's sort of attention-grabbing. Here's an interesting story. Bloomberg is reporting that Lloyd's insurers have pulled as much as £500 million from hedge funds and private equity after investment returns have fallen by more than half. Catlin, Britt, Chaucer, and Beasley have withdrawn or redeemed requests on as much as £434 million of investments, including in hedge funds. The chief operating officer of Catlin, Paul Jardine, said the premise we and the rest of the world looked at in terms of hedge funds was that they would provide an uncorrelated return to things like the equity markets. That didn't happen. In 2008, hedge funds posted their worst year, dropping 19%. Aggregated accounts for Lloyd show they posted £522 million of investment returns last year, or 2%